What's up, YouTube? It's your boy Turkey Chan. Welcome to another market update. Look at where we are now. All-time highs. Everybody that had stayed in the market, you are being rewarded handsomely. Everybody that bought down here during the whole tariff craze, you have been rewarded handsomely. If you're a long-term holder, I hope this is just another day. Long-term holders, they've seen it all. This is just another day. But for us beginners, this is like wow. Like, let's just take a little history lesson, you know. I started getting into all of this looking at the market during COVID, and then during the whole inflation run, and now the tariff craze. So 3 big drops ever since I started looking at financial stuff, just for the action, just for the drama. And this is like season 3 of that drama. But enough of that. Today we are up 80% overall. S&P 500. It is, yeah, I mean, I was looking at it overnight, and then throughout the day it just slowly hovered up. No fake outs, no nothing. Just a simple trading day. Straight up. In the morning, it was flat. Not a lot of action. But then come towards lunchtime, they roar up. Chill out for lunchtime. And then one last final run just to close the day. So again, it's either morning lunch or end of the trading session where all the crazy moves happen. And then after hours, just a little bit extra. So we're at all-time highs. Everybody that held, give yourself a pat on the back. So where do we go now? So there's a lot of different options. Most of the time when we're at all-time highs, everybody's screaming, oh, this is unsustainable. We're going to fall, we're going to fall, we're going to fall. Other times you're at all-time highs and you're continuing to make all-time highs, continuing. And then you'll have a crazy pullback. So we don't know. We don't have a magic ball. We'll just have to look at the price action as it comes in day by day. So yeah, crazy. Let's take a look at ChatGPT. I asked it, why is the market up today? Let's take a look. All right. So NVIDIA and AI continue to fuel this rally. Generative AI, probably seen those Google videos on TikTok. And then there's a broader tech-heavy NASDAQ 100, soared 30% since April. Beautiful. S&P nearing record highs. The S&P briefly eclipsed its all-time high for the first time in over 4 months. These 4 months have really been just another one of those events. Like I said back here, COVID drop, Biden inflation scare, tariff scare, another one of those episodes. So we'll see where we go from here. There's a lot of talk about PE ratios of the S&P 500 reaching unsustainable levels. We'll see how that plays out. As long as earnings do well, they can keep at those levels, but we'll see. Okay, interest rate cut optimism. All right, we've seen a lot of news about this. Trump versus Powell. Trump bashing on Powell. Powell not wanting to cut because he wants to be super dovish and wait for the June, July inflation reports before he decides to cut rates, just because the uncertainty of tariffs. Both sides are valid, but at the end of the day, it's up to Powell to cut. So it doesn't really matter too much what one side says. Ultimately, it's up to Powell. So speculation is building the Fed may cut rates sooner than expected, possibly starting in July, which is coming up very soon, after dovish signals from Trump-appointed Fed members and a softer CPI number. Futures now pricing a 25% odds of a July cut. So 25%, not too high. Usually when you're around 50 to 75% is when you'll see more optimism about a cut. But it's funny how I mentioned Trump appointed Fed members, so there is some sway there. The dollar has weakened, dropping to a 3-year low, further boosting equities. All right, so I guess when the dollar drops, equities go up. People are storing their cash in equities to get a better ROI. Makes sense. Easing geopolitical tensions. I thought this was the main driver. A ceasefire between Israel and Iran has eased concerns over oil supplies. Oil hasn't spiked up per se, so that is the underlying reason for why we're not seeing the heavy quote-unquote inflation. Inflation. We have been talking about inflation for the past 5 years. It's crazy looking back at this chart, this 5-year chart. We're slowly getting out of COVID. COVID was 5 years ago. It really felt like yesterday. It is, the past 5 years have felt shorter than the past 5 years since before COVID. It's hard to put into context, but enough of that. So in summary, tech stocks led by Nvidia and cooling inflation and geopolitics. So let's take a look at Nvidia, see how it is doing. I haven't really looked at it. I just mainly look at the overall market. So it's only up. Oh, it kind of jumped up today. So yeah, I mean, pretty good jump. 7% jump over there. Year to date, you're on 14%. Let's take a look at Apple. Again, I'm more of a broad market guy. I don't really like looking at individual stocks because it's like picking an individual player versus a whole team, if I were to put it in sports terms. Sure, you'll get more bang for your buck if you pick the correct individual stock. But if you pick the whole team and that whole team has a good bunch of players, you're going to get a championship. But star players can reach high peaks of stardom. So it's preference. Again, I'm just here for the drama, for the action. Let's take a look at Apple. Apple used to be the crown jewel. It is down 20% year to date. I mean, since COVID, it's been the talk of the town. You know, Apple's been crushing it along with Tesla. So it's kind of natural for them to have some pullback, some down years. So we'll see. All right, let's take a look at Tesla. So Tesla, they got some hype over the robo-taxis, but wow. Okay, so it spiked up Monday, Tuesday, and now the hype has died down. So we are back to pre-robo-taxi spike. So not a whole lot of movement, but again, for the 3-month, you're still getting 15%, but year to date, wow, it is down 16%. So you're seeing a shift in some of these names. Let's see. I think there's Meta. Meta's been doing well. It's been doing very well. Meta is cooking. It is cooking. If I could go back in time, I would have picked up some Meta way back in 2024. I mean, this has just been a straight shot. Straight shot. If you bought in COVID, you would have doubled your money. That is outrageous. Meta is cooking. Absolutely cooking. Let's see why. It is cooking. Absolutely cooking. I mean, if you take a look at the overall chart, it did have that huge pullback because of, I think it was Apple changing their software about ads. So, you know, they didn't really like that. But man, ever since then, Mark Zuckerberg shifting to a lean product line, it has just exploded. So if you own Meta, again, give yourself a pat on the back. That thing is absolutely a monster house. Monster house. Year to date, 20%. Monster house. All right, guys, that's all I have. Didn't want to go on too much ranting, but those are, again, some of the star players in the FANG scene. Wow, I still can't believe we are back here. This V-shaped recovery. Again, if you invested towards COVID, you would pretty much get your initial investment back. Whew. But yeah, guys, that's all I have. Happy all-time high day today. Ciao.